What if your life insurance policy has been quietly bleeding you dry for 2 decades, and you had no idea? That's not a hypothetical, that's exactly what happened. And the moment the numbers came into focus, everything changed. We're talking about a policy that was signed when frosted tips were still a personality. Gas was under $2 a gallon, and set it and forget it felt like genius financial advice. 20 years later, that same policy had morphed into something unrecognizable, premiums climbing, cash value underperforming, and the death benefit frozen in time like a financial fossil. Here's the thing about whole life and universal life policies from that era. They were often sold on projections that assumed interest rates would stay comfortably high forever, which, spoiler alert, they absolutely did not. When rates collapsed in the 2000s and stayed low through the 2010s, those illustrations became fiction, and the policies quietly started demanding more just to stay alive. Think of it like a car lease you signed expecting to drive 10,000 miles a year, but the contract recalculates every January based on conditions you never agreed to. The destination is the same, a death benefit for your family, but the fuel costs kept rising while the engine got older and less efficient. The first crack appeared when the annual statement showed the internal cost of insurance had nearly tripled from year 1. Meanwhile, the cash value growth had slowed to a crawl, barely outpacing a savings account with a velvet rope at the door. Most people see that statement, shrug, and file it away, and that's exactly what the industry counts on. Inertia is the single most profitable product that insurance companies have ever sold. The replacement process started with a 1035 exchange, which is the IRS's polite way of letting you move cash value from one policy to another without triggering a taxable event. It's not glamorous, it doesn't trend on social media, but it is one of the most underused tools in personal finance, like finding a secret door in a house you've lived in for 20 years. The new policy came in with a guaranteed death benefit that matched the original, lower annual premiums and structural transparency that the old policy never offered. The savings over the projected remaining life of the policy reached into the tens of thousands of dollars. Not speculation, actual, guaranteed, contractual math. Now let's be honest. Skeptics will say replacement is just a commission play by agents. And sometimes they're right, replacement abuse is real, and regulators track it. But the antidote to bad advice isn't no advice. It's better analysis, independent review, and understanding what your policy illustration actually guarantees versus what it merely assumes. History reminds us that the 1980s and 90s produced a wave of policies built on rosy assumptions that aged about as well as a 90s hairstyle. And the wave of replacements in the 2000s and 2010s wasn't coincidence, it was correction. The lesson repeated is that financial products are not wine. They don't always improve with age. The practical move here is not panic, it is audit. Pull your annual statement, request an in-force illustration at current assumptions, and compare it against what a new policy with today's pricing and guarantees would actually deliver for the same or lower cost. Don't let the sunk cost fallacy hold you hostage. The 20 years of premiums already paid are gone regardless of what you do next. The only question worth asking now is, what is the most rational, unemotional, size-appropriate decision from this exact moment forward? The philosophical undercurrent here is simple discipline is not about finding the perfect product. It's about reviewing the product you have and being willing to act when the data supports it. Conviction without process is just stubbornness wearing a blazer. And yes, there's genuine comfort in knowing that whether you replace or retain, the act of actually sitting down with the numbers puts you in a completely different category than the majority of policyholders who have never once questioned their premiums. Preparation, not prediction, is always the real edge. If any of this got you thinking about your own financial picture, whether it's life insurance, real estate investing, home contracting projects, or finding the right lenders, check out our links in the description below and let's figure out your next move together.